Tell me how you advise your clients to use their assets so that they could not only continue to stabilize their business, but also so how they could actually grow their businesses.
Right. So we're all used to, let's talk on the individual side. Hey, I'm going to take out a loan. We got the dreaded social security number. We're going to look at our FICO score, get a hit, that kind of thing. And then now we've encumbered ourselves and we can only do so much as an individual. When on the business side, I always try to tell my clients, leverage assets. We're looking at ROI. Granted, there's a rate, an interest rate that we have to pay out. But wouldn't it be great if we get more in than we pay out? That's leveraging. And that's why we have to understand. And guess what? We're building up the credit history under the EIN, the company number. And loans are what? Not taxable. So we get capital infusion, right? And to do things to hopefully smartly invest so we get a rate of return better than what we're paying out.
And I just
That's
wanted
good.
to double
That's
click
good.
on the fact that you said that there is no tax obligation that is going to be triggered when you are utilizing a loan, right?
Mm-hmm. Yes.
Versus having to liquidate any of your assets, which might then incur capital gains that come off with this. Um, Eunice is more of the expert than I am when it comes to utilizing life insurance policies as a secondary source of income for business owners. And you and I, in the conversation, it was a short conversation, but you were telling me that this is one of the biggest secrets that people don't actually take advantage of. So, can you double click and share with the audience how is it that people or business owners can leverage those insurance policies for cash flow purposes in their business?
Yes. So it's sad that a lot of times when they first heard of it, they had a bad apple or a bad experience with an agent who sold them a tool that they didn't know how to use because all the agent was thinking about was commission. And so a lot of people got turned off, if you will, by insurance as a scam, as a thing or whatever, but they don't look at it as another product. Listen, we have all these different products and structures, and that there are pros and cons, but we need somebody educated, a professional educated to show you how to use the product when, right? Example, life insurance. Right away, permanent life insurance. So we have two types, term and permanent on life insurance. Term, 10, 20 years, 30 years. You pay the premium the same, but then guess what? It ends. If you don't die, you lose. Okay. If you don't die, you paid the insurance company all this money for all these years and you lose because there's no benefit, right? Sometimes they give you your premium back, big deal. It didn't grow any, right? It's as if
Hmm.
it sat in the bank and then probably you lost from inflation anyway.
Mm-hmm.
The permanent insurance is either whole life or the indexed universal life policy that grows a cash value. Now, this is better. It's an asset. It's an asset that's growing, it's protecting you. It's multifaceted as an asset. There's a death benefit, yes, but it also has living benefits. So that if I'm living a long time, it's growing. Guess what we love? Compound interest. They're created to be overfunded, put extra money. They're not in the stock market. So if the market crashes, we're not going to lose. We save our principal. It keeps growing every month, a rate of interest based on how well the market does. That's why it's indexed, right? It's attached to us an index. And then as you go on, you say, oh, you know what? I want to expand my business. I want to add another product. Now I have my own bank. I can borrow from it. and then I use it. Hopefully the ROI is better than I'm paying out. You don't even have to pay it back. You can elect to not pay it back. It comes out of the death benefit in case anything happens prematurely.
Mhm. I like that conversation, Angie. And one of the questions that people have asked surrounding that, especially business owners, has been, well, we talk about how you can take a loan from your policy, right?
Mhm.
And they say, and we talk about how the tax benefits of that. But then people always sometimes come back and say, well, if I walk into a bank and get a loan, I also really don't pay any tax on it.
Correct, but guess what? You have to pay the bank back, right? And now it's
True.
under your that Social Security if you got it. Let's say you're lucky enough to have an EIN, but now you're encumbered, right? And now it's going to look like. And then also, what else? What other features are you getting from it? It's really one and done, right? They give you. You're lucky if you know, but what if you have another need? Right now, you got to start over again, put in a new application. But if you're growing your own fund in your IUL. It's growing very nicely. It's protecting you. It has all critical illness. If you have a good policy, chronic illnesses, da 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 da. All these other features that are probably useful to you. And then it's also, people call it life insurance as a retirement plan. It's tax advantaged. It's growing tax free on top of it.
True. And like I think what you said at the beginning is that what we need is more of agents who are going to educate you on the pros and cons of each and to really do it with their clients in mind versus with the commission in mind. Because there are a lot of people who will say to you, I do have permanent life insurance, but I don't have that type of money that you guys are talking about. I'm looking to buy a car, but I only have like two, 300. How can I do that? And you look at it, you look at that policy only to realize that it wasn't structured correctly. So because of that, that's why the cash value component hasn't really grown.
Exactly, because maybe they've been paying the minimum
Yeah.
or, or the face value isn't it. Because remember, if you overfund, also, it can be a modified endowment contract and get a 50% penalty. So we don't want that. But yes, so let's use examples, real life. The earlier, is the best time to get insurance? When you're young and healthy, because it's cheaper, right? There's a cost of insurance piece of it that we have to be careful, right? As we get older, sadly, we may have high blood pressure, diabetes, and all of these things that go through underwriting. So our premium is going to be much higher than when we did it when we were younger. So as children are born, we should be getting policies. Sometimes it's $20, $25. My children were 6 and 8 when I got them policies, and it was like $80 a month to kind of keep the policy, and that's overfunding the policy. That's not even the minimum. And then by the time they're like my son is 18, it's paid for his first year because I had enough in there to pay. If I were smarter and knew then what I know now, I would have funded it even more.
Exactly.
Mhm.
Powerful
No,
stuff.
we have done the exact same thing. I think we got Simone her policy when she was about maybe 4 or 5.
Mhm.
And we got Jaden his policy at birth. And one of the things that I have been evangelizing both on this platform as well as to family members, because sometimes family members are harder to convince than absolute strangers, was do not buy that baby like a savings bond or something similar. The best thing that you can do is to purchase that baby life insurance policy, because
Mhm.
life insurance policies are based off of actuarial tables,
Nice.
and it's going to be the cheapest that you can purchase it at birth, right? It's only going to go up from there, right? But also you understand that it has to be it's capped. So since we got the policies straight for the children rather than as a rider to my wife's policy, right? We were able to get in at that level, but I think it maxed out at what, 150, $200,000.
Correct.
But the
Juvenile policy.
reason
Mhm.
What
Mhm.
I love about those policies is the fact that our children will have those policies forever,
Forever.
Yeah.
forever, and it's going to be at that level. And
Forever.
although my wife and I control the policy,
Hmm.
we control the policy and we can use the cash value component of those policies. Eventually, we're
Yeah.
going to turn over those policies to our children, and they will continue to be able to generate generational wealth.
Exactly. When you know that they know what they're doing, when we're
Yeah.
sure they've been educated, they know what this product is. Yes, great time to hand it over.
No, what we're going to do is we're educating them now
Hmm.
as to, we read the Becoming Your Own Banker probably about 10 years ago. And to be honest with you, we went out and we got an insurance policy that wasn't building cash value.
Hmm.
It was a policy that was based off of a high premium for the death benefit.
Wow.
And we had to go through the personal example. We're always client number 0 when it comes to the things that we evangelize in our business, right? So what we did is we re-engineered our policy. Eunice got the qualifications in order to be able to do it, and then she restructured our policies, and we went forward from there. But what we are trying to do here on this platform is evangelize to small business owners how, if you are a key person for that business, right? And what if something were to happen to you, you want the business to continue to go on as a going concern, but you also want to be able to have coverage for yourself and for your family
Mhm.
in case that instance happen. It's not money that you're throwing away similar to a term policy. It's money that it could be used as a strategic asset as you go forward there.